now just to double check. Blah, 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 blah. TR. Trish. Oola. Alright, yep. I guess we're live. Alright, everyone. If you're joining us tonight, thank you for coming along. This is Cliff from Trishula Software. And per request from a lot of friends and family, I'm going to start trying to show you guys how to do this. I'm pretty adept at doing this, but I don't know how to teach it. So guess what? This is going to be a learning process for all of us. But tonight we're going to cover pretty much the first basic of option trading overall that I had to learn. And that's you have to learn how to draw your levels. Let me, oh shit. Let me go full screen here. All right. So I'm just going to break this down. You know, of course, like this is SPY. This is the ETF version of the S&P 500 on the monthlies. You can see it just keeps going up. It's a wonderful thing right now. But right now, we're going to focus on drawing lines on the weekly. And if it really helps if you're using the TradingView platform. There are other platforms out there. There's MetaTrader, Webull has a small little platform, NinjaTrader, Thinkorswim. There are a lot of options, and it just matters most what you're most comfortable with using. Me, I use TradingView. I've used TradingView like since the beginning. You know, of course, you know we got all the PineScript stuff here, which is all our indicators and everything. So, but first, your biggest thing that you want to learn in option trading is that stocks do one thing, and not just stocks, forex, futures, securities, anything tradable on a market all follows the same rule, BBR, break, bounce, and reject. Stocks and other securities trade from level to level, and between those levels they will either break, bounce, or reject. Simple as that. And we're going to start right here, right now. So if you're new to this, if you're trying to figure things out, I know I might have a friend watching who's pretty much like saying, "Hey, I want to learn how to do this." And if you get set up on TradingView here, of course, like this is SPY right again. To start drawing your lines, you have this vertical pane right here that my cursor's going up and down on. So right at the very top below the crosshair, I have a little line that says trend line. And if you scoot over, there's a little tab here that says trend tools. I'm going to click on that. And I am going to go down to horizontal line. This will just draw a complete white horizontal line. I can go in, I can change the color, I can add any type of text to it. But for right now, we're just going to draw a little white horizontal lines. And just so I don't have to keep going back and forth, I'm going to turn this on. This is a keep drawing lock. So no matter what, I can draw as many lines as I want without any reckless abandon. The first thing that you want to consider is that, we are, SPY is at all-time highs right now. Technically, we're in what's called price discovery. Once it broke this 695.74 level, about what it looks like, about 5.5 weeks ago, it just keeps going up. And again, this is a period of price discovery. So it does. So I don't know where the ceiling is, but this is a good place to start. So we're going to take the weekly close and we're going to align our cursor right here, and we're going to just draw a line. We're going to go down to the most recent low from that, and we're going to draw another line here. So right now, we've established an entire range. So we know that if SPY goes down next week, you know, God forbid, we know what the first set of levels are. But going backwards, I see that I also have a series of rejections right here in these three candles. That's enough to warrant the level, because at least I know that at one point this was resistance. Right now, it's support. When SPY started going up and broke through into all-time highs about 5-6 weeks ago, this resistance becomes support. And eventually, if SPY, God forbid, if it goes back down to this 695.74 level, it's going to be it's going to be support turn resistance. So drawing these levels helps you understand support and resistance levels. And again, we're on the weekly. So we're going to keep going down here. And right now I'm looking at periods at where it goes up and down. So say we drew this level down here, which is correspondent to this support level right here at 628. We know here 628 used to be a resistance until it finally broke through, retested, and kept going up. Pulled back and kept pushing up forward. So here, I know that I'm going to take a look at this pullback level right here. And then this was all the way back in November. And I got a nice big wick right here. I'm going to draw 2 lines right here. And here's why. This tells me this is where buyers exist, just based on how the candle's structured. Of course, this was a bullish candle. It looks like for that week, it hit 655.08, just kept going down. But then all of a sudden, it just started pulling back up. This tells me that buyers exist here. Whenever you see long wicks like this one right here, and it's, what the fuck? Sorry. Turn that off. When you have a resistance turn support, and yeah, like this is a period of several months right here. But when I know when price comes back down and starts to touch this level, this support level, and I see wicks like these, and then followed by a bullish candle, knowing that this is a complete, what's known as an inside candle compared to this last sell-off the week prior, this is a very strong bullish indicator, as you can see here. Now, does it work out like that? Not all the time. So don't be reluctant on things. You have to understand the market's going to do whatever it's going to do, but continuing forward. I'm going to turn my line maker back on, lock the drawing. So right now, I've established that I have a retest zone right here. And we're going to put that in right there. And I'm going to put it also right here. Because if I have to, you little bastard. All right, there we go. Now, since we have a set of lines right here that's pretty close together, I wouldn't consider this a retest zone yet until price action actually retests this zone. But I'll tell you right now, knowing that's the S&P, if SPY ever came back down like this, it would have to be like the Hunter virus or some shit like that. But at least now we know, hey, this is what I'm calling a launch point, the 630 to 617 level here. Continuing forward, we're just going to keep going back. So I know that we had resistance here, and now this tells me that this would be a retest zone because price was all the way up here, dipped drastically, and like this was back during the dip in April, like during all that Iran bullshit, but price violently snapped back up. So I'm drawing a line right here. And also I'm going to pay attention to longer wicks down here too. I already have a low. So, and then I'm starting to notice this. Just buyers, buyers, buyers. At least I know where the buyers are. Now here you have a gap in between these candles. This is pretty important for you to notice. These are gaps. Yes, it's exactly what they are. And gaps are very important because eventually at some point, price action is going to come back down and retest. And that's a very important thing that you have to understand, especially when you have here. Now, this isn't a gap, but I more consider this an imbalance. You have a drop throughout this week right here. And then the very next week it opens and it's all the way down here. So you have a little bit of what I call imbalance right here. And then it tries to, and then buyers try to come in, try to get it back up, dips again. Again, this was during the entire Iran ordeal back in March and April. And once it re-hit this zone, okay, we're going to go back up. But there was a price gap right here. You always want to make sure you get those price gaps. So what I'm going to do, I'm going to draw a little rectangle right here. From the low here to this high. And I'm going to extend it out. Now I'm going to expand this. Oh, you prick. I got to turn drawing mode off so I can get this. Yeah, why are you doing that? I apologize, everybody, but you get the gist here. Eventually, that's a very important level, and you always want to mark it. So I'm going to make sure that I do the marking here. Add text. That's one thing great about TradingView. You can, once you figure out the user interface, or what they call the UI, and you start learning how to do things here, it makes life a lot easier. So boom. Key weekly levels. Now, we're going to dip it back down to the day. In fact, I'm going to do one better. I'm going to dip it back down like to the 1 hour here. Because one thing that happens in options trading, a lot that I see, is that I'll see a lot of people sit there and say, well, it was supposed to go bullish, but I don't understand what happened. You know, I don't get it. Well, I can tell you one of the biggest lessons that you can ever learn. When in doubt, zoom out. Say you're here in, like, on this SPY level here, right? Actually, I need a better example. I need one that I know that failed out. Where's Coinbase? Okay, good. Right here. Coinbase is a perfect example of this. And of course, you don't know, Coinbase is where you can buy and trade crypto from. But we're going to take it back to, say, May 11th here. Post earnings, dip post earnings, buyers started coming in and started buying it back up. And now it bought it to where, let's just going to say right here, I'm going to draw another line. Let's say right about here. Because I have two bullish candles and two long bearish wicks. It looks like bearish pressure's coming in. But say this guy was in on a trade, and I think he said he got in around 207. Now you go 207 to 216 on Coinbase on a 0 day, or even like a weekly. If it makes that move in a day, like, you're making close to about 800 to 1,000, depending upon where you bought the trade and how far out you bought it. But he anticipated that the price would keep going up, and this happened and completely wiped him out. The very next day, he was swinging bullish post earnings. And you can tell it's post earnings because TradingView has this little flag right here. Most of your social media trading platforms will have a little indicator that it's earnings. And he got completely wiped out. But he's saying, well, like, everything was so strong bullishly, I don't understand what happened. All right, well, let's go back. Okay, price action weeks prior hit this upper zone of this gap between 216.67 and 217.6. We're just going to say 217.87. There's sellers up here every time price action's coming up here. Now, granted, you had a break right here, like within the last week, last 2 weeks, last Thursday, not last Thursday, but the Thursday prior. But it did the same thing. So what's this telling you, everybody? This is telling you that, hey, if price is getting into this zone, there's sellers here. Because every time it gets up, yeah, it tries to puncture through and then keep selling. That is fundamental. You have to understand where these levels are. And especially in trading, if you ever have a doubt, you have to zoom out. I'm on a 1 hour, but I need to see what's important about this level. Oh, look at what we see here. We go all the way back to January of this year. Guess what? There's sellers here because right when it hit this level, it just went all the way down. Now, granted, price action prior to that back in early January, and this looks like late November right here. Yeah, once price started going down, started bouncing, came back down, started bouncing, and then it just tried for a pullback. Looks like a little basic 4 hour, 7, 8 day cup and handle. Cup and handle fails. But let's go back even further. Oh, this is all the way back in May last year. Do these levels look familiar? They're the same levels that we drew here. In fact, that's a wedge. I need to draw that one out. Oh, shoot. Let's do a trend line. At least I know that if it breaks this trend line here, it'll dip down to this 162 level potentially. Buyers potentially at 159.30. Anything fails, it goes to 136. Now, granted, that's a lot and it's speculative given certain factors and positions. I mean, Bitcoin could easily go to like 85, 90 grand next week. I don't even know where Bitcoin is right now. But Bitcoin goes up, this goes up. Same thing with Master, MSTR, same thing, MicroStrategy. But you see now how critical long-term and short-term levels are. Because it almost gives you a reference. Okay, within this 221.63 to $214, there's action in this zone. There's right now this is a big resistance level for Coinbase. But weeks prior, that this was a major support. And guess what? You can tell that this hadn't been tested at least in several weeks. Price action always comes back to certain levels. That's another critical thing. Say we're going back here. Price action kept filling around with this resistance, kept testing and testing and testing, and then it broke, and then created this new level, created this new what we would call a new lower high. Price action comes back down, tests this level. Do we see anything important about this level here? Yep. Look, buyers, more buyers. They dipped deep, and then no more buyers. Buyers became sellers and started shorting the shit out of it, bringing it back down to this level. Are you guys starting to see what's going on here? Are you starting to see where this is really important when it comes to drawing levels? Now, you don't want to have like 5,000 little white lines on your screen, but it's important to understand where your key critical levels are in all phases. So say if I just took them out here, let's go to something different. Let's go to, what's something I beat the snot out of this week? You know what? Let's go back to our CoreWeave example that I posted on our social media. We had good success with CoreWeave. So now we're looking at CoreWeave on a 4-hour chart. I can see here that since the end of March, it's been on a big bullish tear and even hit this 138 level. Okay, so let's look at the 138 level. 138.58. If say you're just looking at it like this, and it's like, oh, okay, so like this is like the current monthly high that I'm looking at, you know. Okay, you know, we have a level down here, but why is this level important? Like, how come it didn't keep going? Well, when in doubt, zoom out, keep going back. Yeah, granted, in early May, it hit this 138.42 high, but look all the way back in October, literally just after my birthday. Look at that same line that showed us where sellers are. They're sellers. Imagine getting in on a fucking. I tell you right now, if I saw that, so that was 136.40 all the way down to 65.27 from it was like right before Thanksgiving to, the beginning of November. I would have had to take I would have had to take like a 4 or 5 month option because the premium on that probably would have been about 2-3 grand just for one option. But like if you hit that, like that would have been like a 600% or 800%. That's nuts. I probably would have got out down here. Knowing me, but going back to seeing how levels are important. Now, granted, like this level isn't perfect here, but at least we know that there's sellers here because every time price action pierces through, it goes back down until eventually price action pierces back up and uses this. So right now we're looking at this level as a resistance, but we also have other resistances up here because you can keep timing it to where, say, if CoreWeave did jump back up and hit this level and pierced it, say it went to 153.18 to retest this level, guess what? It's coming right back down. Or it could come right back down, but you know where those levels are. But let's keep going here. So here I'm going to take a weekly low. This is going to be last week's high because I know that this is a critical level because this is where it starts going down, pierced through, came right back down. Became a support, hit another resistance, became support again, failed. Now this is support. This is what we're looking at. Keep going back further. I know there's buyers here. I know there's buyers here, buyers here, buyers here, and here. We have successfully dissected pretty much about what would be a few months of options trading, figuring out where the buyers and sellers are. Because a lot of times, like, you might find yourself, it's like, where are the buyers? Like, I don't understand. You have to look deeper into the chart. You have to start marking certain zones. It's like here on CoreWeave, when I hit that massive trade, I already knew that this 94.81 level was critical. But I needed it to break 103 in order for me to entertain the trade. But going into Thursday, when I saw a gap, I'm like, oh God, it's going to come right back down. Because remember, you do have a gap here. Very minuscule. We'll take this down to a 15-minute level so we can draw it a little easier. Just like that. Turn drawing lock off. Oh, I'm not in the mood to deal with you today. Cursor. Clicky. Gappy. Oh, sometimes that's a pain in the ass. But even down here, like you see, we drew lines and levels on the 4-hour level. You take it down to the 30, you see a better and more broader playbook. You can almost see where your exact retest zones or when price action starts coming in, where you start seeing action at. And when I mean action, like, look at this retest zone down here. This was back in late April in CoreWeave again, from what looks like 102.51 all the way to 103.46. We have a little retest zone here. Is that important? Yeah, because guess what? At one point, this was a resistance, broke through, retested, probably grabbed a few more buyers down here because I see a little wiki action, and then broke through. Now it became support. Broke through all its other levels. Guess what? Retested. That's a retest zone, guys. And granted, it's not as broad because you could draw lines here and here, but eventually you're going to start confusing yourself. So that's why it's critical. It's like, hey, it's critical to draw the right levels, but you just have to figure out what's going to be comfortable for you. Like most of the time, like I'm entering trades to where I'm only in it for a couple days, and it's not like I'm really holding anything. But I am going to make sure that I do mark the key critical levels. The most recent high from this time frame, the most recent low, and start picking off the highs and the lows where it's important. The swing points. A lot of times points like this where they come down, this seems like they hit a level. These are swing points, guys. Every At some point, everything is a support. At some point, everything is a resistance. At so many scales. That's what's important. Now, granted, you could have all the best indicators and you could literally have the physical manifestation of Gordon Gekko right next to you, but it's still not going to degrade the fact that, one, you can be perfect, but the market's going to do what's going to do. Like, just like CoreWeave is going to do what's going to do, just like Meta is going to do what's going to do, just like Rocket Lab or Robinhood or Google. See it? Now, the beauty is that I take these lines and I transpose them into code. Let's go into the entire Trishula library. We're going to go into our Trident 3 MTF order block system right here. Give it a second to load. This is our multi-time frame order block generator, and it's near indispensable. Wonderful. We're up. Turn drawing lock off. This back on. Kind of funny how it starts to draw out some levels for you, isn't it? Let's make sure we're set up properly. We're on Google 4 hour, base 4 hour, multi-time frame 1 hour. We'll take this second one down to 30 minutes. Let it. Did you do it? Yep. Well, hardly any 30s generated, but at least with the order block generator, which detects order blocks on multiple time frames instead of just one singular. Let me take it down to a 30. See if we can get a better example right here. I need a better example. Meta, yeah, you've been funky for a bit. I know I got some red and green in you here. Perfect example. We're on a 30-minute chart, but here's a 30-minute order block, and it also reads out where the 60-minute order block's going to be. So you have a 30 and a 60. So you know here, oh, okay, when drawing levels, I know almost where the support is. But also, like, don't use this as like the entire bee's knees, because Meta can easily hit back down to this level, consolidate, and bounce right back up and pierce through all these order blocks. But at least you know that when these come up, it maps out where everything is level wise. So, you know, if you know that price at Meta keeps breaking down, it breaks through this level, breaks through here, breaks through here. Oh, okay. Oh, when's it going to go back up? You may see action here in a possible play, but it's not indicative of anything. But at least you know that when these generate, you know where your levels are. You take it back up to a 4 hour level. Easy peasy. I know where the major point is. I know what it has to break through, because we also programmed it to give us the exact volume numbers here. So if I know that this 4 hour block generates, I know eventually a retest is going to happen. And if you want to see how fast it will generate, let's start from here. Now we're going to take this down one at a time. Boom. So remember when I was talking about price action will always retest a level? This is the beauty of our order block system. We almost pretty much detect when a retest will happen. And right here is one of the perfect examples. As we keep going, buyers start to come in. They want to retest that level before they want to keep taking it down. Now, granted, buyers come in here, but yet your price still drops down. It really isn't indicative of anything, especially if you buy an option that further out on their expiration, you know. But, you know, you trade Meta, like, you don't want to do that. But, oh, look what happened here, another order block. So now we kind of have like a range of levels at where price action can play with. And as you can see, it generated multiple order blocks. You take it down further. We'll take it back down to 30. See? Already established support. That was that tried to retest here. So we know there's buyers here too. But even if we take it back, I want to see if buyers generate it here. I hardly trade Meta anymore. Too volatile. Yep. And then if we keep going, all that support breaks. Yep. Gap, retest, high retest. See how this order block generates after the fact, where these were previously broken? It works. It's fast, but you gotta be fast when trading. See how it keeps going. We're gonna watch it break. Oh my God. Boom. And once it hits that support level, price bounces back up. Oh, look what happens here. Buyers been coming in. Tries to retest this level, breaks. Pay attention to this candle formation right here. Where my circles at? See how you get this big rise up, starts at about 608, goes all the way up to about 613, because like the order blocks are measured at the wick in the body. And then the very next 30 minutes, yoink! It looks like bulls were just trying to cash out their positions as best they can so sellers can come in and just bring this down. Of course, buyers are starting to come in here. If you use something like Cheddar Flow or Quant Data that helps you detect options flow, what'll happen a lot of times is you'll see nothing but calls come in. So say on Wednesday, May 20th, this past Wednesday, you know, I think Meta probably had about a good 8 or 9 million in call options coming in. And yeah, it popped here. But then just kept selling off until it had to retest this level. Well, remember when people buy options too, say like when professional hedge funds and professional traders buy these options, they're not buying fucking Meta 0 days. Like, what are you, crazy? No, they're buying these things like months and weeks out. So say like if they were buying it up on Wednesday, May 26th, like those options had to be at least an expiry of probably up to June 18th all the way up to July 17th. But here, without the fact, you see how these levels are important, how price action reacts. And again, indicators are more of a visual aid. Say we take down that, we'll bring up the big girl. Actually, we'll bring up the full spread, the full current test spread. We'll demaximize, turn the experimental screener off. We'll turn off Vajra. We'll turn off the order block system. We'll turn off the new variant of Trishula and Starfall. We'll bring up Kettlebog, our smart money concept system. Now, granted, yeah, don't get fucking nervous. This is just stuff that you can easily turn off. I keep shit on so I know things are tested properly. And plus, on Kettlebog does something different than a lot of other smart money concept indicators do. It has built-in support resistance. It has built-in what we call trench and apex zones, or what some would call discount and premium, supply and demand, all euphemisms for the same thing. So we're going to turn off the DBR and RBD pattern. Those are trend reversal patterns. RBR and DVD are more so trend continuation patterns. And since it's funky on Meta, we're going to go to something a little more comfortable. We'll do it on Microsoft. So, granted, we drew a whole bunch of horizontal lines, but a lot of times, like, them horizontal lines are only going to tell you so much. The lines do tilt, as you can see here. You know, yeah, Catobog, just like any other Trishula indicator, we make sure levels are mapped, marked. We make sure that, you know, hey, this is a potential targeted high, as evident here. There is a potential for a reversal here, but but this looks like a targeted high, so this looks like it could be a weak high and pierce back through. But let's take all the horizontal lines out of everything. Let's take this out. Let's take this out. Let's take this out. Let's take out the faint order zones. Let's take out the equal high and equal low. Take out the fair value gaps. We'll keep the glow levels. We'll take out the zones. Go back to my 3-line count. We'll turn off the boxes. We'll turn these off. We'll turn off the range detector. And we'll turn off all that. Look, same thing. Trend lines. These are trend lines, people. They're not level lines. Like, oh, hey, I know 444.28 is a critical level. Not only is drawing your levels important, but also drawing your trends is important. So if we take just everything out real fast, let's take out like this little drawing here, that little white line, and we will go back to just drawing some basic levels here. Highs, critical cells. What, you prick? Turn the fuck on. Okay, good. Now, when do we know when a trend line is forming? I'll take it down to the 30. Because trend lines are a little bit easier like to see on 30s. So I'm going to go back up here to my drawing pane. I'm just going to start drawing trend lines. Of course, you need to go to this little arrow. Boom, right there, trend line. Now, granted that I already know that this is a zone, but also notice that price action keeps wanting to bump up. So what I'm going to do, I'm going to take my adaptable little trend line here, and then I'm going to just draw it across. I'm going to make sure that it crosses the entire span of the price action chart. Now, this could also be seen as a different type of resistance too. Let's take this area right here. From this most recent big high at 444.26, I'm going to start tagging all the higher lows until I know 1, 2, 3. Price action tried to come up here, try to retest the trend. Nope, we're going to bring it back down. Oh, we have buyer levels down here. Let's see if we're going to retest the trend, retest this support level, take it. Simple, right? Just like I'm looking for here. Okay, this price action broke out of this trend line, hit this level, retest it. Okay, so technically now we're forming a new trend line. And the only thing I'm going to do is just shift this back and forth. Extend that out. Easy. So now again, I'm looking for if price action starts shooting back up, what it's going to start hitting before it punches through. It's like it's easy to tell you the truth. Most of this is just drawing lines and waiting to see what happens. That's really all it is. There's really not a whole lot to it. It's a big emotional game, because if half of you right now started going in the Robinhood, started trading, or you went into Coinbase and started trading crypto. Let's bring up Zcash right here. Zcash has been going off like a pack of fucking firecrackers. Zcash on the 30. This is so easy right now. Let's turn off this fucking replay. We'll scale it out. Okay, right here. Trend lines. Most recent high. And I know price action is starting to smack right here. Eventually there will be a retest of this trend. As you can see here, we'll extend you out further, because just in case if the sell-off comes back down here, maybe back down here, grabs buyers, you know, you're still looking at everything from Monday, and right now we're in Saturday. But this is what it basically is. So moving forward, I'm going to start trying to help you guys figure things out, draw lines, and try to get some of y'all going, because a lot of people have interest and times are tough right now. You know, people are trying to make money, people are trying to do good, and trading is a very viable opportunity, but you can't treat it like gambling. And this is something that you're going to have to learn on your own, and you may lose a lot, you know, but the gains and the opportunities are there. I just saw something new here on Zcash. Let's start drawing that out. Bounce off, bounce off. All right, we're going to draw a line through. Oh, yep. Once it breaks this level, take it down. Now, granted, you can use these lines to start drawing patterns. If you really want to get into stock chart patterns, you got to start knowing what they look like. Here's a good example here. Now, granted, you can see these patterns pop up and think, oh my God, yeah, like this is going to be great. Yeah, I got a double top here, and you know, I'm going to short the bastard. But patterns fail, trends fail. That's something that people have to understand. So when you do this, you have to exercise risk management. But when you see patterns and things developing, like let's go back to what's something that's always patterny. I think Tesla's pretty patterny at times. Let's go to Tesla. We'll take you up to a 4. Okay, here's a good example. You'll eventually start hearing and understand terms like bull flag and bear flag. You know, wolf waves and shit like that. Guess what? That's a big old bear flag. And just in case, boom. Bull flags versus bear flags. And yes, you do have multiple types, but it's kind of pertinent not to understand them as bull flag types, but just individual patterns. That's how I always understood it. If that's how you understand it, please by all bloody means. But a lot of times, like, everything you see is a pattern. Either they'll form on 1 minute charts. Say like Up here. You got a bear flag right here. Toward the end of the day. Pretty high bear flag. Breaks. That would have been a hell of a trade. At the end of the day. Patterns form. Patterns accumulate. It's just a matter of what you see, how you see it, and how you execute it. But we're gonna play around like a little bit, show y'all some of the big guns. What we use. We'll bring up the new Trishula. Don't let this intimidate you. We'll turn you off and turn off the volume gaps. Turn on RDM wave trend. Where's my damn table? Go back to inputs. We'll throw you on the bottom left. Keep you out of the way right now. So this little pup right here is the one that started it all for us. You know, this was the first indicator that I ever built. This was the first coding anything I ever built. And this is went under so many iterations and names, and pretty much it ended up becoming the entire namesake of this little thing we started here at Trishula Software. In short, Trishula is what we call a dual trend wave system. We generate two different types of trend waves. We generate what's known as a zero lag moving average on two different scales, which is evident by this. Turn off RDM wave trend. Which is evident by this green cloud right here that eventually turns red. It's pretty much your big trend line. But we threw in a second trend wave system as confirmation. Now granted, like, this is like a little clustered right now. So now we only have dual wave, and the RDM wave trend is technically off. We don't need to show EMA lines on the chart right now. We're just showing folks how this is done. Why can't I turn off the goddamn moving averages? Oh yeah, right here. Actually, we'll keep these up. I don't have it set up for Golden Cross. 8. No, actually that's 21. We'll do 8 EMA here. The classic combo. All right. Trishula's no different. It's just we went from drawing straight horizontal lines to signify levels. We drew diagonal lines to signify trends. Now we use code to draw wavy lines in order for us to find near perfect entry points. Now granted, no entry is perfect. If any entry was perfect, guess what? I wouldn't be here doing this and we would all know how to do it. But at least you're starting to see how important levels are. Everyone starts to wonder, oh, well, how come it just doesn't go straight to this level? Because if you look at a stock chart, normal stock chart, where it's trying to go, fucking things all over the fucking place. Yeah, it spikes up and then it goes down, and and then it dips, and then the next candle, it tries to go up again, but then it goes back down. Forget all that. The market does what it's going to do. Remember what I'm trying to teach here. We went from drawing horizontal lines, diagonal lines, and now we have lines that curve. We already have the RDM wave trend up and the RDM dual wave system in Trishula going. But what are these other lines? These are moving averages. And there's hundreds of different types of moving averages. But your most common ones are your simple and your exponential, your SMAs and your EMAs. Right now, Trishula inside has a four EMA combo, and we put that in because if you start out on TradingView, you're only going to have about 2 indicators that you can use for free. Trishula wanted to eliminate that. We wanted to pack as much in there that made sense as humanly possible. Which, granted, it looks like a lot of times, it looks like someone shot a confetti cannon on a chart when you throw our stuff up. But you can easily go in and just start turning stuff off. All you gotta do is just go into settings. Okay, I want my buy sell proc system up. I'm gonna turn RDM dual wave off because it's a pain in my ass, and just get it out of the way. I don't have anything else up. Okay, good. And then let's say I'll throw on our new Project Vajra, which is our volume profile heat map. Hit the replay. Boom. Because I still know where the levels are, regardless whether you draw them, regardless whether you buy Trishula indicators subscriptions when they're available, Lux, Algo, Chart Prime, it doesn't matter. Every indicator will tell you the same thing that not using the indicator will do. That stocks do the same thing. They trade level to level. They break, bounce, and reject off of every level based on supply and demand. Guess what? The indicator tells you no different, and it tells you no different than when you start drawing lines. Oh, well, how come it didn't keep going up? Well, when in doubt, zoom out. If you don't know why, let's go back to the why. Oh, guess what? Last time price action hit this level, it sold off. What happened the time before that? Oh, it became resistance turned support. Now, at this point, right here, this looks like it was last Friday. Oh, support now became resistance. Retest, okay, now it's resistance. We're going to keep going down. Comes back up to retest this level, starts selling off. Oh, support turned resistance. Y'all see it now? Instead of spending like $130 at Lux Algo, or I forget what Chart Prime promises, or even if you do like a Discord trading subscription, before you do any of that, learn to do some of the work yourself. And the beautiful thing about TradingView is you have a paper trading option here. Say if I want to paper trade Bitcoin right now, you bastard, Bitcoin Coinbase. I can easily go in, start paper trading Bitcoin easy. Just to understand what's going on. I'll start marking off my levels as how I see them. As how I truly see them. Kind of like not within the lesson I gave. Because I'm going to be marking every sector. And we'll do this high. We'll go back, turn you on. Hit. I have my retest zones marked. Boom. I can easily drop down on a 3-minute chart. Okay, let's see if it breaks this 776 624 level. If it does, I'll start going in. And it looks like that's about to happen. I'm looking for a break, and then here, and then I have 2 levels here that I want to look at that are important. 76,722 and 76,792. I want to see it break above here at 76,691. And then once I get this up and further, I get the trend continuation. Then I can buy. And this would be my target up here at 77,201.48. If you want to go higher, great. You handle your own risk management. You're a grown adult. If I have to start making videos on risk management, like it's not going to be a pretty sight. No, I'm joking. I know it's a learning process, but that's what everything is in general. Within trading, you have to understand, yeah, trends and news and all these things and options flow and all, like, they dumped 25 million in calls in Oracle throughout the week, but it still went down 10%. Why? What happened? What's going on? Nothing's going on. It's institutional buyers like that know what's going to happen, and you can start drawing your own levels, and you can start doing your own research, and you can start to understand what's happening. This isn't something that you just walk into and you're gonna start making money instantly. That just doesn't really happen all that much. You look at all the great day trader stories, BNF, CIS. They're two legendary Japanese day traders. Those guys were losing money hand over fucking fist. Billionaire Bears is a great channel. I mean, tremendous video production and quality, but each one of these stories will straight up tell you these guys were losing millions. And one, BNF, it was during the 2008 financial crisis, because he didn't know how American markets were trading. He mainly focused on the Nikkei, which is the Japanese stock market. Yeah, like, yeah, okay, son, we're going to take your ass out. But that's what happens, man. So you don't have to worry about trading the news. You don't have to worry about buying big expensive packages that trade options flow and GEX data and everything. Drawing your own lines on a free TradingView account is pretty much going to be mostly what you need. That and a lot of patience and a lot of will and want to do it. If you do want to use an indicator with it, please, by all means. Pretty much I'll just go back to this. We'll just take all these out. I wish I could just keep I wish I could just delete all the top shit and just keep the fucking oscillators up. Boom, simple RSI, and this is our door knocker RSI, and this is double back. This is our multi-time frame CCI. It's known as a consumer commodity index. I use it a lot. I like it a lot. I like it a lot better than MACD. But yeah, like an RSI or MACD, or here, how I have this double back CCI. I can easily trade this all fucking day long. See how I was talking about going back to the example earlier? I'm looking for it to break a level. Well, it just broke that level. We're just going to go ahead and buy one paper trade, one Bitcoin here. This is my first stop. In here, don't mind this fast line here, but pay attention to the slow line as long as it keeps going up. Same thing with double back here. As long as this slow yellow line keeps going up. Now, granted, the moment that the fast line and the slow line cross, that's when I get out of the trade. But, you just be patient with it. Understand what's going on. Don't panic. If you panic and you start asking, so should I get out of the trade? Just get the fuck out. You don't need to handle all that levels of stress. And yeah, trading is very stressful, but it's very rewarding. It's been rewarding for me personally, in terms of professional and personal development, but granted. So we're going to exit that. Thank you for joining us. We hope you learned something. Again, I'm brand new to teaching this, and thank you for bearing with me. I hope you learned something. Thank you all again. Follow us, subscribe us. We have a lot of work going on right now. We were doing a lot of work in the past month, rebuilding our sports betting models, and performing all the social media via IP platform. That's your Discords, your WhatsApp, and your Telegrams and Slacks and Microsoft Teams and shit like that. We've been working on that. We've been working on also our cloud arbitrage project, which helps our sports betting models and also helps us be able to get these in screenshot format over to you. So say we're gonna get rid of the drawings here. So say Project Starfall on a 30-minute chart. Oh, hey, I have an alert that fired. Guess what? It sends this entire screenshot to Discord. That's what we're aiming at right now. We pretty much have the entire sub-platforms built. It's just a matter of testing and execution. And again, we have all our test stuff on our own personal private in the Discord right here. We haven't generated anything in a couple of days. Like I have a AI agentic swarm that I built that's handling all that and running that information privately on our ledger. But right now we're only focused on baseball, on rebuilding the sports betting model, which is horrible because back when we did this, it was the baseball that killed it. Because baseball is just too random when it comes to sports betting, you know. Like, yeah, Aaron Judge can hit 200, pull over 200 hits in a season, but you know he's 7 out of 10 in his last 10 games, you know, in terms of getting a hit. And figuring out home run parlays is always fucking fun. So, but like that's what we've been working on. We do it because we love it, and we also know that, you know, there's a lot of people throughout the social media world that broadcast trading indicators, call outs, and parlays and stuff, and sports betting props, and they just crack people. You know, there's one group that they charge $5,000 a month, but apparently they win 75% of the time. $5,000 a month for 75% isn't good for me. If I'm paying $5,000 a month, I better be hitting 95% and getting a foot rub from the owner every month. That's how I feel. But this has been our labor of love. And granted, we coded all this by hand. We didn't like say, all right, we didn't go into AI and say, oh, hey, do this and do this. No, I figured out every goddamn last line of this shit. But thank you for joining us. And again, I hope you learned something. If some of you joined, thank you. If a couple of my friends are listening, I know my friend Johnny out there. Hopefully you're hearing me. And thank you. Appreciate you. And I love you, buddy. And to a lot of my other friends, to my wife, Liz, I love you. Thank you for your eternal support in this journey and me bettering myself. I like to thank the NBA Lifestyle Wave, Frankie Grimes, and Fly Fonzarelli. I like to thank and give shout-outs to some of my old friends out there. Garrett. Who else? Soko. Oh, gee. I really don't talk to a whole lot of people anymore. But, you know, shout out to all of y'all if we're still friends and if I'm still in your good graces. But, again, this is Cliff from Trishula Software. Thank you for hanging out with us on a Sunday. Oh, so Sunday? What am I? Sunday, Saturday. Jesus Christ, Cliff. Jeez. What the hell are you thinking? But I love you guys, and thanks for hanging out with us. See ya.